Welcome everyone. Glad you're here. We're going to be talking cash flow today, which is one of my favorite subjects. And hopefully by the end, it'll be one of your favorite subjects too. So making smarter decisions with QuickBooks Online cash flow tools. So the majority of you here, I'm sure, are already using QuickBooks, but we're going to go over some ways to be able to utilize the system and some tips and tricks in order to make sure that you are aligned with your business and using the tools that are available to you in order to be able to start making better decisions moving forward. My name is Liz Scott, and I am the CEO of Accounting Lifeline. And our vision and mission is to work with small business owners and to help them to understand their numbers and make better management decisions. And let's start talking about what we're going to be going through today is cash flow fundamentals. And then also, being aware of today's economy means that you also need to be thinking about what comes next and how do you make the best decisions possible for you, your business, your employees, and forecasting. That is one of the ways to be able to start looking ahead. How do you make these plans for what the future can look like for you? And then being able to strategize your next. And then how can QuickBooks help? So what are the tools that are available in this software that you're already using that maybe you didn't even know those features were there? So it's really fun to uncover hidden little gems like adult Easter eggs. So if we're thinking about discovering the fundamentals of forecast or cash flow, then what we're thinking about is being able to find your true financial north. So a lot of you have heard KPIs. So that means those key performance indicators. Those can be reports, those can be goals. Those are things that are measurable and they're things that can be marked. So we know what true north looks like. And if you have marked your business's true north, then you're able to follow along with your compass and be tuned into what your true north is and not get distracted by a scenic route. And so instead of deviating left or right, you're able to say, I'm not going to take that long path because I already know that that's a distraction. I'm headed in this direction. And then you're aligned with your goals and you're able to actually see distractions from opportunities. Those are the ways that then you can start saying, I'm going to measure that by utilizing my income and say that's growth that I want to be able to predict month after month. And then also to be able to see what are some areas that you can start analyzing. Your cost of goods sold. So these are the expenses that are associated with your specific industry. So if you are a business that works in the t-shirt industry, then you're going to need to have the raw materials like the screen printing ink, and then also you're going to need the t-shirts. So those are expenses that are associated with your business. The other piece of it is overhead expenses. So maybe you need to do an analysis to say, do I have more money going out than I need to have? Do I need to cut back on some of my subscriptions? Do I need to cut back in some of my spending? Do I have too many employees? And those are kind of areas that you start to make an analysis because you want to, at the end, be profitable. And it's not just enough to be profitable, but you've also got to have cash flow. So these are two different areas of measure. So just because you're profitable does not mean that you have healthy cash flow. It could be a scenario where you're actually cash poor, but you are a profitable business. And the way that this can relate to each other is maybe you have people who have not paid you yet. And so you have really extended your accounts receivable to terms that are not sustainable for your business, and you're not able to have enough cash flow to make it to payroll. So these are all things that you need to be thinking about when you're measuring your business. So how is your business performing? So if we think about a scenario, I really like to talk in stories. So in this scenario, let's talk about Willie's wonderful website. Many of you here are entrepreneurs and you've been entrepreneurs for a while and you're here to be able to learn some tips and tricks. Well, let's talk about Willie. What is Willie doing? And right now he's got 5 employees. He's got this custom website design shop. And what he would like to do is, of these 17 hats that he's wearing, he wants to start taking off a couple of them. one of the hats that he wants to take off is the management hat. So he wants to be able to hire somebody into that management position. So he has one less responsibility. And then he also wants to bring in a new designer because he has noticed that whenever he's tracking his performance, the area of business that he is doing best is in website design. So he wants to bring in a new designer. The other thing is he wants to hire a salesperson to answer the phone. So again, he's taking off another hat, which allows him to pass that responsibility over to this other person. And this allows for that entrepreneur that's inside of many of you here to be able to smell what's coming next, to be able to pivot if necessary. If you are too busy doing inside of your business, you're not able to make predictions into your industry. And if there's a pivot that's necessary, you want to be part of that. So if you're too busy being involved in the interior of your business doing, you're not able to always see what's happening on the outside. So your compass, you might as well have turned it off and shut the lid because you're not able to point in your true north and move forward. So when we're thinking about our KPIs, these key performance indicators, we're thinking about all of these different things that are revolving around us we need to pay attention to, which means how do we hire people into these spots in our businesses to grow? Well, Willie wants to be able to have enough cash for that. So we're looking at how is he performing? We look at our balance sheet. This is an area where we're able to see how are we doing with income, cash that's inside of the bank account based on that income, and then how are we doing with our liability? So do we have credit card debt? Do we have loan debt? Do we have payables that we need to pay out? And then also we have our equity section, and this can be our shareholder distributions, our owner's draws. These are the areas that are going to be in our equity section. The other thing that we have is our net income lives on our balance sheet and is a direct number that is pulled from your profit and loss. So if I come over and I look at my profit and loss, I should be able to see my revenue here. So how is the income coming in, and can I measure it month over month, and then be able to look at my expenses of my business. And then I'm able to, again, see that net income value that's at the bottom. I think it's fun to go into QuickBooks and look live. So here we've got Willie's wonderful website, and we want to go and see how Willie's wonderful website is doing on their balance sheet. So if we go and we look at a swath of time, we can see how is his checking account looking? How is his, whatever we're thinking about his accounts receivable. So who owes him money? We're able to look at that number. And then also the liability. So how much money is going out of his business? What can he anticipate is due to his vendors? So he's got payables. In this case, he has got payables that are around the $5,000 mark. And then we can also see at the bottom, he's got his equity section of his business. The other thing that we want to look at is if we think about a profit and loss, this is a period of time. So this is a stamped period of time to say, how are you doing? How are you performing? And looking at his year, we're able to see how has he done with these different areas of income. So I would recommend to a lot of you, if you're just tracking one type of income, all services or all sales of product income, to start breaking it down. So that way you can also, just like Willie, be able to see where should he put his next hire? Where is he performing the best? And where do more maybe marketing dollars need to go? Where does more focus in hiring need to go? So each of these areas that you start to measure, you're able to say, now I can figure out and put my finger on what the true north is. And then again, you've got your net income, which is a number that relates over to the balance sheet. So those two numbers are always going to be the same. The next thing that we have is a cash flow statement report. This is something that you can actually grab inside of QuickBooks. A lot of people are unaware of this report. So if you go over into your report section, I'll show you here in a second, you can find this report too. So what this report tells us is based off of our net income, how many dollars are we still waiting on to receive? So we've invoiced people because we've performed the work and we are now waiting for payment. And then the next piece of that is, what bills do we have that are outstanding? So we need to be thinking about what are our liabilities going out. And then this is that flow of money. So we've got money coming in, money going out, what's left over. Money coming in, money going out, what's left over. So this is a continual flow that you want to measure. And this cash flow statement is a great resource for being able to say, how are you doing? So if you go over to your report center and you just type in cash, you're going to get this cash flow report to be able to view. It's really handy for being able to determine how you are performing. If I'm thinking about cash flow, what exactly does that mean? Again, it's this idea of money's coming in, money's going out. So it's this continual area to pay attention to because it is always moving. And I get often asked, why is it so hard to manage my cash flow? And the reason is we've moved to a virtual world. And this means we need to move our systems to be thinking virtually. You have got a tool with QuickBooks that you already have in your capability. So now let's take it and how do you start using it to its best ability to meet your needs as a business owner? That means you don't have a cash box that you're keeping all of your cash in. You don't have all of these customers that are only paying cash. They're also paying by different PayPal accounts or they're paying by merchant services. And so you've got tools to be able to say in QuickBooks, I'm going to use my merchant service provider. Now I can start to be able to predict how many dollars are coming in because I've got it's the merchant service. QuickBooks Merchant Service tied to my QuickBooks. I can measure that now. And then you're also doing things like paying your own vendors virtually. So what are you doing to enter in those expenses? You're not paying them cash. You're paying them virtually either by a bill payment online or you're paying them in terms. And so you want to enter in those terms into QuickBooks. So there's things that you can start to do in order to be able to manage your virtual dollars. And you need to be able to think about measuring these virtual dollars because this is how you keep your doors open. This is how you have predictable growth. This is how you make sure that you can hire and then retain those employees. You want employees to be secure and knowing that Friday their paycheck is going to cash. There is nothing worse than having an employee not be able to cash paycheck on Friday because there's not enough management of your cash flow to know, can those dollars actually be cashed to the bank? One of the things that I see a lot of the times is businesses are managing their cash flow based on their bank balance. Well, this is not a true indicator of how the business is performing because it's only part of the story. This is the piece of the story that is historical. This is telling you what has happened in the past. Dollars came in, dollars went out. That is historical information, and it does not allow you to take advantage of the opportunity of maybe some things that would be opportunities that came to you and they said, hey, would you like to maybe make a purchase on your cost of goods sold that is at a discounted rate? And well, if you didn't know what your actual cash flow was to be able to make that purchase, you might have a missed opportunity there. So where do business owners need to be focused? They need to be laser focused inside of QuickBooks on your bank register. This area should be your area of truth. This should be the place that you're going to be able to say, okay, the bank said I had $6,000 roughly. I'm coming over to QuickBooks and I see that I actually have $2,200. And the reason for that difference is here, you don't just have historical information, but you also have things that are items that you can predict. So you've got expenses that are maybe your payroll liabilities. Maybe you've already paid some vendors, but it hasn't cleared the bank yet. So this is where you need to actually be measuring what your true bank balance is, because here's where you're going to be putting in future information. So business owner insights with areas of focus needs to be your bank register in QuickBooks. It needs to make sure that you're up to date. If you need help managing that, there's lots of different resources available to you. You can have maybe an office admin that you hire and they need QuickBooks training, so you can reach out to somebody who helps to train those people. You can reach out to outsource services to make sure that you're getting the right kind of help to make sure that you have up-to-date books. You need to have a cash flow plan. So what are you doing in order to be able to say, how am I going to be able to measure what my north is? Well, you need to have a cash flow plan. So I need to be able to start entering bills in order to be able to know that I can make payroll on Friday, for example. Build budgets and forecasts. When I'm thinking about budgets, I'm thinking about budgets are great for being able to think about your rainy day. So what is the least amount of money that you need in order to be able to survive? That's where we build a lot of budgets, in that mentality of worst case, what are the operating expenses that you must have in order to be able to make it through the end of the week, month, year, whatever. Forecasts are a different type of tool. Forecasts are thinking about your goals ahead. What would you like to see happen? What would you expect to have happen in your industry? If you are like Willie, you're seeing that websites are more in demand because they have more people who are buying online. So Willie is starting to beef up his design department because he wants to be able to have more people who are going online, searching up websites. So he's going to be spending more of his focus in that particular area. Same thing with building his forecast. That's the area that he needs to be funneling money and thoughts into, and his energy needs to be focused on these forecasts. If you have something written down, that allows you to pivot as necessary. So that way, that's how you prepare for tomorrow. That's how you make these plans of what comes next. So these financial reports, these are tools that people have at their fingertips, but sometimes don't always have a idea of what they mean. So being able to talk through them, this is something that is really nice whenever you are reaching out for help and you're using services that are outsourced in order to be able to say, let's talk through the financials in order to be able to have the best understanding. That means being able to say that we've got our balance sheet here, we've got our assets, we've got our liabilities. We also have our profit and loss. So we've got it broken down to our income and our expenses. How is that doing? The other thing that we're looking at is the relationship between accounts receivable and accounts payable. So how much money are we expecting to come in, but hasn't came in yet? And how much money do we have going out and that hasn't left us yet, but we have debts that we have made promises to pay. So what does that look like and what's that relationship there? So you need to be thinking about accounts receivable and accounts payable as having a relationship to each other. And that's a plan that needs to be part of what you're thinking about whenever you're considering cash flow. So if I coming back over into QuickBooks and I'm thinking about how best to plan, then I want to be thinking about how do I evaluate my business and the needs of the business. So I want to be able to make improvements. I want to have that rainy day thought. And how much money do I need to budget to survive? That's a thing that you can do. Then I want to be thinking about focusing forward. So how do I make a forecast? What are the things that are going to be on my agenda in order to point me to my north? So don't get distracted by all of these movements over here, shiny objects. Don't squirrel. You want to stay focused into the area that's going to create the success for you. That means being able to also be aware of what's happening. So if we're thinking about the economy as part of this, maybe there's people that have needed to also pivot and change directions as necessary. So this means that sometimes you need to do a reevaluation into your industry. We know that whenever there's a pandemic or political changes, that in these scenarios, we can have questions as to what comes next. So you want to be able to plan for that. You want to say, I know what it takes in order to make my business survive. And I know what my plan forward is. I might need to pivot. But at least you've got a plan into what the future looks like. That allows you to then take that plan and maybe you have to move it a little bit. Don't think about a forecast as being concrete. Thinking about it as here's our roadmap to the destination that we want to get to. That's how you make sure that you're paying attention to your sales, your expenses, your cash flow. So we know when the economy is down, typically the sales are down too. So this means that you could have a negative cash flow. And so you want to be able to make sure that you've got some reserves saved up. The standard is 90 days worth of reserves. And so if you know that you're going to be expecting an uncertain future, then start pulling back and have this rainy day fund for just in case. How do you do that? Well, you take the amount of money that you have right now and you start looking at it as the foundation. What can we do to start evaluating? Do we have some spending habits that we need to cut back on? Are we going out to eat? Are we buying the office lunch too often? Are we doing things like going and getting Java Juice for the whole company? And maybe that needs to be an area that we cut back on. We want to make sure that we have people to employ and money to be able to employ those people. So cut out the waste. Make sure that you've got your target in mind of where you want to be focused, where you need to be focused. And that allows you to be able to start managing off of the numbers to look forward. If we think about Willie, what is Willie doing that we would want to maybe make some suggestions to him? We know that he wants to increase the area of activity that is his web creation services. So this is an area that he said, I want to bring in a new designer. So we're starting to look at, well, in June, you didn't have as much of these. So maybe this is an area that you need to start marketing more towards if this is an area of focus. We want to also look at what are your cost of goods sold. So maybe for him, this was his hosting services. It doesn't matter how many people that he's got on this hosted platform. It's an X amount of dollars. So great. That means that he can get to a higher threshold of his hosting services and not have an increase of expenses. So he wants to utilize that resource that he's got that's open to him. Client costs, maybe he's buying additional things that are a platinum level that he doesn't have as many people buying that platinum version anymore. So he needs to be thinking about, okay, what's my gold version of it? Gold is great. So let's make sure that we are doing and investing in what our customers are actually purchasing. And then if you're in inventory, so if you are in an inventory situation, you don't need to have as much stock on hand anymore because a lot of scenarios we're able to drop ship. So it means we can cut back on warehouse spacing. It means that we can cut back on shipping costs. And so there's lots of areas that you can start thinking about how can your business start reducing expenses, because we can see in Willie's June, he had a loss that month. Well, great. He had profits other months, but we want to do things to start be able to predict what he's going to have month over month. So we can have these trends, and that way we don't have squirrel moments where we get distracted. So Willie's starting to say, hey, I want to make some improvements in my area. I want to start doing better. So he wants to be able to start leveraging cash flow and make better decisions. There's tools out there that will allow you to start pivoting and being able to predict market changes. We can start doing those inside of QuickBooks. We can be thinking about our cash flow plan. We have our report that we can pull. We can be thinking about managing the business activity. So we can pull our expenses and we can have a report that looks at our profit and loss expenses. And we can start thinking about our ROI. Well, this is a customer evaluation in relation to expenses. So if we think about in this scenario of customer basis, if we've got, like Willie, he's got some hosting services. Those are an ongoing subscription. For him, he doesn't mind marketing a little heavier and spending a little more dollars in these subscription type of clients because he knows month after month after month once they come to him and start utilizing his services, they'll stay with him because they don't want to move their website from one place to another place to another place. That hopping creates uncertainty, and that's a distractor. And so he knows that he wants to make sure that he's got the most stable and most secure hosting environment possible, and offering these great websites that he can then design for these hosted platforms. So his return on investment means that he's willing to put a little more money into these customers because in the long run, it's going to pay off for him. So you need to be thinking about your industry and how much does each customer cost in order to market to those customers. What is the dollar amount that makes sense whenever you're gauging your marketing efforts? And you need to map out goals. So what is the purpose of your business? You need to define that. Who are you? So in Willie's scenario, he works with wonderful websites and designs them. So he wants to make sure that he is not being distracted by, he doesn't need t-shirt sales. That would not be an area for him to go suddenly off and start designing these wonderful t-shirts, bring them in, and he's got them now inside of a storefront that nobody's visiting because they're all buying online. So for him, he needs to be thinking about what is his business's purpose and being aligned with that. You need to state your financial aspirations. What money do you need in order to be able to bring home? So are you a family? Are you an individual? And you have X amount of dollars that you want to realize each month. And so what does it take for you as the business owner, entrepreneur, in order to be able to satisfy that need? So you need to be thinking first, what is it that you need to bring home? Second, how do you make that happen in your business? So those are two different goals right there, and you need to be aware of both of them. And then next, you need to be thinking about understanding what you need to bring home in your pocketbook, understanding what you need to be able to make in the business in order to make that a reality means you need to be attuned with your sales. You need to be thinking about your expenses. You need to be thinking about the industry, making sure that you've got an ear down into that area of focus. Score, you probably have heard this before, and if you haven't, this is a really, there's a wide variety of scorecards out there. So you can search this, and this is a tool that you can use to be able to measure. You start marking my financial objectives. I want to be able to mark them because I want to be able to measure them. I need to be able to have targets. And then being able to say internal processes. What are you doing internally to make sure that you're meeting those demands? Do you have tools set up like merchant services? Do you have tools set up like being able to look at your cash flow? Do you have tools set up that allow you to be able to churn and focus your attention and your efforts really well? Because time is a resource. And if you're not managing your time well, that's another leaky faucet moment, and you're going to lose money. And then if you're thinking about your customers, who are your best customers? Who do they look like? And how do you make sure that you pull in more of those? So if you think about your customers, you might say, oh, I really like so-and-so. And then you start to identify why. Is it that they're easy to work with? Is it that you're able to satisfy them easily? Is that the area of focus that you should continue? And you need 10 more of those customers just like that. And then you learn and you grow, learn and grow. So you measure, learn and grow. So these are all areas that you start to measure so you understand your business. All of these reports have meaning and they have value. Sometimes it just takes walking through them verbally in order to be able to go, I know my numbers now. I'm going to actually start to manage by my numbers and make better decisions in relation to payroll, into being able to say, I have customer surveys that are coming back and my customer ratings are going up. So each of these are areas of focus that you can measure. These types of trends allow you to see month after month, how are you progressing? Or did you go in a different direction and you started to deviate a little bit and you're seeing a downturn in business? Do you need to focus back in? Or did you have a forecast and you built it and you had a place that you were measured to and you saw a little trend of something different and you decided to move your forecast. That becomes your new north. That is okay to pivot, but you need to be thinking about how are you going to do it. And this is a statistic that I find devastating and sad, but the truth is that even profitable businesses fail, and because of a lack of core cash flow. And this can be a business that has each month has $100,000 in profit each month on the books. But yet, if they have $90,000 out each month in receivables, and it takes them 90 days to collect, now they've got $90,000 out times 3. How are they going to make payroll? So you have a business that on paper is profitable, but in reality, they're cash flow poor. So these are the types of businesses that fail, and it's because you need to go back and you need to look at your numbers. It doesn't matter if you have $100,000 per month profit or you have $100,000 annual profit. No matter what, you need to be thinking about, are you receiving the funds, those dollars, income, in time to pay for your expenses that are going out? So this is how we start to think about cash flow. So if I'm looking at cash flow in relations to bills and invoicing, I'm thinking about I'm invoicing the money that's going out, and then I'm paying the bills that are coming in. So this constant flow of dollars. And if I don't have enough money to cover my bills because I've got payable dates that are too long in terms, I need to make a shift. So this is what that looks like. If I think about my opportunities to start measuring, I can look at my accounts receivable. And in Willie's case, he has this medical customer that he just really believed was going to be this best customer. And he has $13,000 worth of invoicing that he's done for them. He is thrilled and he's feeling like he's on top of the world and has success here, until he realizes that they haven't paid him in over 90 days. So now he's starting to say, I've paid payroll, I've paid for the subscription cost, I've paid for their hosting costs, I've paid for all of these things, and this customer still hasn't paid me. So in reality, is your best customer really the one that you invoice the most? Or is your best customer the one that gives you money at the time of payment, and you're able to predict that because then you're able to then say, I can pay my bills that are going out? This is a measurement area that you need to think about again whenever you're thinking, who are my best customers? Are they sometimes the ones who pay you the fastest? Or are you still happy with these customers who are going to take 180 days to pay you whatever? Do you need to now build up relationships with a bank in order to make sure that you've got cash flow to sustain if you've got these customers that are slow payers? The other piece of it is, I often find that a lot of businesses are not taking advantage of entering bills. So instead, what's happening, they have a bill that comes in, and instead of entering it as a bill, because they've got 30-day, 60-day terms that are available to them, instead what they're doing is they're paying it immediately. Well, each time that you're paying that bill immediately, and that's not necessary, you are decreasing the cash flow that's available to be able to sustain maybe just your payroll on Friday. So if you're able to say, I want to enter bills, now you've got bills entered into your system to be able to say, I can start managing when these dollars go out. So that's part of this idea of measurement, including forecasting. Forecasting is exciting because now we're looking ahead and we're able to say, what do we need to be doing? We need to be thinking about capital investments. We need to be thinking about better relationships with our banks. We need to be thinking about how do we make these forecasts that help us to survive into the future. So if we know that we have some uncertainty, well, let's plan for it. Let's go out, let's get the data. Let's start making sure that we're aligned with our true north. Are we selling products that are in demand? Do we need to shift our products just a little bit? There's been some amazing opportunities that have came out of some devastation. There has been some businesses that have blossomed. Lots of virtual businesses that have started to really make improvements. So you need to think about, where do you start? You need to start with your goals. You need to start with this idea of building a forecast. What is your sales cycle? Who are your best customers? You need to look at your historical information and pull that into your plans for the future. You need to be thinking about looking at, even though you are an established business, do you need to go back to the drawing board and do you need to start putting in some financial projections because you've needed to shift a bit? And that's okay. Do you need to have money that you start putting towards the growth and the start of maybe a new revenue stream? Do you need to be thinking about these payroll costs? Because again, the more that you can start assigning people to all of these hats that you're wearing, the better that it positions you, the entrepreneur, into what's happening in our industry, what's happening in your specific industry. And then being able to also think about what comes next. So we need to be making some improvements in the collection of payments. We need to shorten that time period. We need to be offering shorter terms. If we're going to continue to say we're going to offer terms, maybe instead of 90 days, let's do 45 days. Let's just cut it in half. If you are somebody who says, I offer 30 days now, but I can collect money out in the field, wow, that's a huge improvement because you are hitting the people at the pain point time and when you're performing the services, and they're most grateful at that time and they're most willing to pay at that time. So yes, that means that you might have a service tech out in the field who is collecting payment and there might be some errors. It is okay, because I can tell you it's 100% better to have a few errors than to not have any payment at all. So how are you going to be able to meet the demands of your business? There are some really cool tools that are inside of QuickBooks that you may or may not be paying attention to. So cash flow tools is an area inside of QuickBooks that's going to allow you to see an overview of how much allowable cash do you have. So it's measuring your checking, it's measuring your savings. And then the next thing that you can see is how much money do you expect to be coming in, and then how much money do you expect to be going out. So if we're thinking about virtual dollars, we need to have a way to be able to measure that, right? So one of the things that we were talking about is being able to enter bills, means that we have expected money going out. That is another way to be able to be in charge of your cash flow and be managing your cash flow. And you can enter in these events. If you say, hey, I'd like to go purchase a new vehicle, or I need to plan for the hiring of a new person, you can enter in trends and events inside of cash flow tools. It's a free feature. And then you're able to start saying, I'm not going to be cash flow poor and sabotage my business. I'm going to know that I have X amount of dollars coming in as far as invoicing and services being performed. That's my income. And I know that I can expect it in a particular date range. And then my expenses, now I'm managing those and I'm not paying them immediately. I'm starting to enter bills. So that way you can start to have cash flow management on the outgoing of funds. And now we're able to say, hey, we have this slice of money to play with. We have a slice of money that we're able to do things with. So whenever we're thinking about some free tools that are available, because I'm all about free. So if you're thinking about some free tools, SCORE is an actual, not only a idea, but it is a website that you can visit that is part of the SBA. It's funded by them. It's free. And so you can go and reach out to a mentor. And what they have been able to measure is that whenever a business is working with a mentor, so somebody who is going to help you with the coaching and the understanding of your numbers, that just 3 hours shows a markable, measurable improvement. So you have lots of resources available. You have outsourced help like myself. You have outsourced help like SCORE. You have all of these tools that are available to you. And so you can start making steps towards improving your future. So what does that look like? It looks like start defining what your north is. Start defining where do you want to go. Remember, you got to know how much money you want to bring home in order to be able to have a measurable amount to say, in my business, am I able to fulfill that need that I have? Next, you need to build your budget. What's your rainy day scenario look like? QuickBooks has a beautiful area that you can build out these budgets. It's free. It's part of the solution that you're using. And the next thing that you have is being able to make some cash flow plans. So if you're aware of your cash, then you can start making these plans. you can start to also, part of this plan is who are your best customers? So now you're managing your customers. And then the next thing that you have is being able to make cash flow improvements for collection. So reducing these terms down or eliminating them, whichever one makes sense in your business, and then managing your expenses, your dollars that are going out. And then whenever you go through and you look at your report card, so think of financial restatements as your report card, then you're able to say, hey, I'm doing well. I know what to expect. So when we're thinking about what can QuickBooks do to help you, you've got these cash flow tools that are available. That whole section, cash flow tools that are inside of your QuickBooks area. You've got budgets that are free. It's a tool that's available to you. You've got your reports and you have apps. So you can also connect apps to QuickBooks. Another resource that you have is we've pulled in all of these QuickBooks tools onto a landing page on our website. So you can go to and you can see all of these tools, how you can use these templates and how you can actually start making markable, measurable improvements. So as far as the takeaway today, we went through some of the fundamentals of cash flow. We went through what do you need to be doing in order to be able to plan for some uncertainty. And so how do you make best cash flow decisions? How do you start to make a true north for you? And that's building that forecast. What does that look like? And then the other part is strategizing your next. It's exciting whenever you're thinking about you have this business that you've created. How do you grow it? And so you want to be able to grow that into a healthy tree. And then QuickBooks can help by having all of these resources available. That's it for this session. Thank you all for joining in.